Right, Thomas Gottstein is out, and the new chairman, Axel Lehmann, has been saying this to Jeff.
Look, Thomas is a great guy. He did a great job, but two things have changed. First, we embarked on a thorough strategy review, and we announced today that we are speeding up our transformation. And Thomas has decided that at that point of time, also for personal reasons, it's better to do a change. So these are the two things that have changed since Davos.
Did you put pressure on him to go? Did you feel he was not the right person to conduct this comprehensive review?
No, he is the right person. He was really instrumental to drive that strategic review. He stands fully behind it. But at a certain point of time, you need to have the full energy. And I think at that point, he and I felt it's better to change and bring somebody like an Uli Kerner in, who has, I think, a great track record on operational transformation.
So do you think Thomas's time has been a failure?
No, not at all. Let's not forget, he took over the helm of that company. 2-3 weeks later, COVID, Greensill, Archegos, all those legacy issues. You needed somebody like him who was fighting for the company, and he did that.
You say things are going to be different under Urs. In what way?
No, it will be, on one hand, a continuation. I mean, he is an industry and a Credit Suisse veteran. He knows banking inside out. He was building businesses. He was COO in large organizations. So he has a truly front-to-back, and I call it a back-to-front experience. He will take over with immediate effect, and he will drive the transformation that we will speed up.
How do you respond to those investors who will say, well, it's not very imaginative, is it, putting in another Swiss banker who's come immediately out of the Credit Suisse family, was at UBS before? If you want to make significant changes at this organization, you should bring in outside talent.
We have a lot of outside talent. Just look to our board of directors, look to the executive board. I mean, the vast majority is external people. You want to have somebody who can deliver. You want to have somebody who can execute. You want to have somebody who can drive the transformation. These are the qualifications we need now.
If the investment bank has been such a challenging area, why is Christian Meisner staying at the bank?
Christian is fully committed to our strategic transformation, and we announced also today that we are now further strengthening the leadership with appointing 2 veterans of Credit Suisse, leading to a banking and to a different markets business.
Let's pivot then and let's talk a bit about the plans that you've laid out here. We've got another comprehensive strategic review. Why, after 2 years of misery for shareholders, do you not already have a plan that can succeed for this bank? Why are we in another strategic review?
We concluded that we want to further reposition the investment bank. Basically, taking the path on which we are, but speeding up. We have already exited 3 billion capital out of the prime business, but we came to the conclusion also in light of the changing market environment that we will want to further transform the bank and put it really on a footing for success for the future and the years to come.
What does that mean in real terms for changes in the size of your various business units? How many jobs are going?
Look, we will even more focus going forward on our leading wealth management franchise, multi-specialist asset management, and the very, very strong Swiss business. We will have a highly competitive banking business, and we will align the markets business better to serve the needs of our wealth management and Swiss clients. We have announced as well a comprehensive, cost target, an aggressive one. We want to bring down the absolute cost base of the group from currently roughly around 17 billion to below 15.5 in the midterm, which means ultimately now it's 23, 24, we then go into 25.
So how many jobs are going to get to that cost base?
We will inform with detailed plans on the Q3 result.
Let me ask you about the broader business environment, because this is not a great time to be trying to rebuild the ship, even as we have Asia-Pacific clients reducing their activity, fee-generating activity is down. You know all the problems out there, whether it's Russia, whether it's China COVID, whether it's the Fed interest rates and the broader macroeconomic environment, the IMF downgrading growth. None of this is good news for the banking industry. How do you feel that you can turn this ship around, even as the environment you're operating in is worsening?
Look, the environment is truly extremely challenging. It also shows, particularly in our investment bank, that we have somewhat lack of diversification. Asia will stay and is a growth region for us, and I'm highly confident, one day it will recover. So I think the underlying fundamentals are clearly intact, but we need to act and we need to react.
Is the Asia client still deleveraging?
Yeah, the deleveraging is still somewhat going on. It's hard to predict, when we will see a recovery, but I'm confident, over the mid and longer term, that clearly will be the case.
Where do you see in the investment banking business the real opportunity at this stage? You've talked a lot about moving to an asset-light model, but ultimately, how will that fare if we don't get a recession and we get an uptick in business activity?
No, look, we have some formidable positions in our investment bank, and they will be the foundation of what we are going to do going forward. What I said, we will have a much more capital-light, advisory-driven banking business, and we will further align our markets business with the core needs of our wealth management Swiss clients.
And can we just nail a couple of foxes here? One is the market's been speculating about a capital raise. Two, the market's been speculating about a partnership or probably a loss of independence for the bank. I know there was that quite amusing State Street rumour that was doing the round, thanks to one of the financial blogs here. Just tell us ultimately whether any of these rumours will turn out to be true.
Look, on capital, we report, despite the loss today, a CET1 ratio of 13.5%. I'm happy to see that number, and we will guide the market also in light of the uncertainty that we certainly are going to defend a CET1 ratio until the end of the year between 13 to 14%. So I think we are good on this one, and we will manage that very, very tightly. I cannot comment to other speculations, and some of them, as you said, seem to be quite ridiculous.
But I do feel you need to address that, because the market won't take that answer as a comprehensive no. Is it a no? There is no plan at this stage to partner with another business or indeed perhaps sell the company?
That's a clear no.
That's a clear no. Okay, thank you very much indeed for that. Please pass on our best regards to Thomas. We've always appreciated the opportunity to talk with him. Just in closing, if I could ask whether at this stage there will be any further changes in management from here on in that are being speculated about, or indeed there are any further litigation issues that the market needs to know about that haven't been released?
No, I believe we said today what we can say, so I'm really confident on a going forward basis.